Good morning, everybody. Justin Wynings with Team Titan Real Estate. Today I have with me Chris Ulisse with Ulisse Accounting. Wanted to bring him on to give us a little recap of the new changes with the 2019 tax deadlines, as well as a little summary of the PPP loan for business owners. So Chris, want to go ahead and introduce yourself and just give us a little rundown.
Hey, good morning, Justin. Yeah, I'm Chris Ulisse with Ulisse Accounting. Like I said, it's been a crazy year for taxes this year with all the law changes, all the changes due to the virus. One of those is the change in the due date. Obviously, normally they're due April 15th for federal and May 1st for Virginia. Those have been changed to July 15th for the federal return. Virginia, however, is only delayed their filing for 1 month, so they're actually due on June 1st. Also, in addition to that, for probably a lot of your clients who do file quarterly returns, like estimated payments, they're self-employed, they need to send in their estimates. Those dates have changed as well. The IRS has kind of made the first and the second quarter due on July 15th. The third and fourth quarters will be due as normal. That's September 15th and January 15th of 2021. Virginia once again has different deadlines. It's kind of interesting. The first quarter is now due June 1st, and the second quarter is due June 15th. So those are very close together. It doesn't provide much relief there. Then their third and fourth quarters kind of mirror the federal, where they're due September 15th and January 15th of next year. They have actually suspended some of the penalty filings for right now due to kind of the virus. So right now, if somebody has something in either something that's past due, they're not really collecting right now until this is all over with, or until they say otherwise. As far as the PPP loans, the Payroll Protection Program, obviously we've just now entered round 2. Round 1 kind of went pretty quickly. It was within a few weeks that fund was exhausted. All these kind of programs are first come, first serve, which makes it a little difficult because they kind of threw everything at us all at one time, like, hey, here are these programs, and then the rules kind of came later. So it was kind of like basically like a gold rush.
Sure.
Just kind of come get it while you can. So now in the second round, we're about a week into it, and I would recommend, if anybody's still out there who wants to apply for it, to apply as soon as you can. I would first attempt to go through the bank that you deal with your business. If that doesn't work out, I would then recommend going to like some of these smaller area banks. I know Old Point National Bank is accepting applications. Chesapeake Bank, I've heard, has been a good source to go to. Not too familiar with some of the other ones, but I would try some of these local credit unions and banks, because within the second round, there was a carve out of money to go to them, specifically to smaller banks. Some of these larger ones just get so many applications all over the nation that it's hard for them to get to you.
Sure.
Yeah. So then the other thing I would say for those two is just have. So the beauty of the Payroll Protection Program. So I guess I should explain what that is. It's basically to give you a couple months pay for a couple months of payroll for your employees. So you, instead of letting them go or laying them off, that you'll keep them on staff. So that's kind of the premise behind it. And the great thing about it is if you use it for the proper the specified expenses, then that loan can be forgiven. So basically what they do is they take your payroll for last year. Let's say, we'll use easy number. Let's say it was $120,000 for all your employees. Divided by 12, that's an average payroll of $10,000 a month. And then they multiply that by 2.5. So it would be like a $25,000 loan. You have 8 weeks to kind of use that money for the specific purposes. And if you do that, then that $25,000 loan is forgiven. So one of the things that just kind of came out on that, though, is if that happens, your loan is forgiven, that money will then, those expenses will not be deductible on your tax return, though. So that's kind of the one catch on that.
Okay.
It will not, right? Initially, it seemed like it was almost like a double dip situation where you kind of get to deduct it as an expense, and actually, you don't have to pay back the loan. So that's one of the guidances just now come out. The other factor in is they make it at 2.5 times the 2.5 multiplier, because they're trying to give you a little bit extra to cover for like utilities and rent and like a mortgage if you have a mortgage for your business, right? And I think the other kind of big stipulation and catch is 75% of this money has to be used towards payroll for it to be forgiven. And there's some other, like I said, there's some other details in there, like number of employees that you keep and retain, for it also to be forgiven. But it can be a great program if used properly. The other thing I would say for people who are going to apply for it now is, start getting all your information together. And the main things are going to be like your payroll reports, like your 2019. And those forms will be 941 and 940. Of course, you can consult whoever is your tax accountant or your payroll person. Self-employed individuals can qualify for this as well. Is basically they just take their net profit from last year divided by 12 and kind of put it through the same kind of calculation. And for those, they're going to want to see like what is called, I'm sure they're going to want to see your tax return, but specifically Schedule C on your 1040 return for self-employed individuals. But like I said, that's definitely something I would kind of strike on now while they can. The other factor is there's also that EIDL grant, which is Economic Injury Disaster Loan. That one is a loan that they can apply for. Once again, it's the funds are kind of limited on that one, so it'll apply quickly. The difference in that program is that's with a loan that has to be paid back, but it's over a course of like 30 years. The PPP loan, if it's not, if the loan is not forgiven, if you have to pay some of it back, I believe the term on it is 2 years, and then I think it's like a 1% interest rate, so it's still a low rate, but you have to pay it back within 2 years.
Sure.
That's all I had on those programs. Any other questions you had, or
no, man, that's perfect. I really appreciate your time and your knowledge. And there's going to be a lot of questions that people have about this subject. So what I'm going to do, I'm going to have your contact information below. People will be able to reach out to you, and hope everybody has a great week. Yeah,
it's great. Yeah, if anybody's got any questions, you can just let them fire away at me. So have a great week, Justin.
Thanks again, Chris. Bye.
Thanks.